Hey guys, welcome back to another video by Fully Informed Trade, or Fitrade for short, knowledge for everyone. My name is Alex Cho, and today I'm just going to analyze the markets and talk about what's going on. Alright, so first of all, the US dollar index is getting close to that 20-day moving average, and I anticipate some short-term support off that area and a quick bounce off of it. Based on those factors coming out of the dollar index, I anticipate the Dow Jones Industrial Average to have a minor pullback from its double topping pattern, and that's further supported by the fact that we have a star pattern at the very top, or doji star. Doji stars are typical patterns that happen towards the top end of a pattern, or a top end of a trading range, or a top end of a peak. So usually these are the type of patterns you look out for when the market is about to peak and perhaps pivot into the opposite direction. Right now, if we did a pretty decent pivot, our first immediate support would be at around 12,000 on the Dow component because of the 20, I believe, yeah, that would be the 20-day moving average would be the first area of support, along with 12,000 being a round number. Alright, moving on, the Euro-US dollar has had a fairly flat trading session for the day session. Over the 6-month charts, we do have a bear flag pattern starting to form up again right here. We haven't really seen a breakdown below it, but once we do get a break below that, we can anticipate even further downside on the Euro-US dollar. Now, my first initial reaction for the Euro-US dollar pullback would be how low? Well, initially, I think, and this is just my belief, that our first major area of support after breaking below the 1.30 area would have to be somewhere between 1.26, okay, and 1.285, okay, so somewhere between these areas right here, which is it's around a 250 pip spread, but I don't think we really could rely on that too much. I do think we're going to sit somewhere between the 1.26 and the 1.27 area as major support. Everything like right here and right here are minor support areas. You really couldn't get much of a bounce off of it because we're already so close to these as is. In fact, we've already found support on it once. If we were to break below that bear flag pattern for a second time, we would immediately break below that trend line and perhaps find support on it for a couple hours, if not a couple minutes at most. So again, this area can really be very reliable for a quick scalp position. If anything, I would wait for the 1.26 area for a major confirmation for support. For now, the dollar index is on a continued uptrend, and the Euro-US dollar is on a continued downwards trend. And I believe this downwards momentum will hold for quite some time, and this bear flag pattern will eventually play out, and the Euro-US dollar will continue going lower. The Dow Jones Industrial Average will pull back because the Euro-US dollar pulls back, and because the US dollar index eventually bounces off that 20-day moving average. What's keeping these markets afloat right now, especially the Dow component, is a lot of sector rotation where people will cut back their weaker stocks and perhaps the S&P 500 or the NASDAQ composite, and they'll reallocate from technology stocks into these more non-cyclical names, perhaps like telecommunications, AT&T, Vodafone, Walmart, McDonald's, Pepsi, Procter & Gamble, names like that, because these are the type of names that tend to earn consistent amounts of money regardless of how cyclical or how unfavorable the business environment may be. Some businesses tend to benefit a little more in these type of environments, such as Family Dollar, Dollar General, and some discount chains as well. But again, if it were me playing this market, I would go for heavier, stronger names that are probably that are industry leaders on the Dow component. Names like IBM, perhaps Philip Morris, again another non-cyclical name that I'm a really big fan of, and companies like Visa Corporation that are leading financial services without being so exposed to derivative debt obligations, credit default swaps, credit debt obligations. The name goes on and on and on. The list goes on and on and on. And the mistrust for these financial institutions are at such record highs, I find it hard to believe anyone on Wall Street can trust themselves with their own judgment. And that's why you're not seeing investment advisors advising their clients to invest into their own bank. I mean, could you believe that you're working at Wells Fargo as an asset manager, and you can't tell your clients to buy Wells Fargo stock, but rather we would have you invest into non-cyclical investments in the U.S. Treasury bond market. That's how bad things have gotten. It's gotten so bad for us to be investors into these financial institutions, because not only do we not want to be exposed to them, the people that work inside of them don't want to be exposed to their own conduct. And that kind of gives you a little bit of a light onto why financial assets are being allocated or are being neglected, and everybody is allocating themselves outside of these riskier assets and into these non-cyclicals, which is benefiting the Dow component, because a lot of Dow component stocks, or a lot of names on the Dow component, are considered non-cyclical investments. Okay? As for the Euro-US dollar, we've already touched on that topic real quick. I believe the Direxion daily financial bull will have a pullback. The main reason why I believe this is because we're running into a double topping pattern on the Dow Jones Industrial Average with the rising star Doji Harimi. And then we also follow that up with the Euro-US dollar bear flag pattern that will eventually play out. And then we're looking at the US dollar index eventually finding some support on that 20-day moving average, which would imply if the US dollar index were to pivot off that 20-day moving average, that would imply the Dow Jones component average would pull back from that double topping pattern on top of that Doji Harimi. And then you consider the Euro-US dollar bear flag pattern, which is about ready to play out and break to the downside. All those factors considered, Euro-US dollar strength implies dollar strength. Dollar strength is negative for the US stock market. US stock market therefore pulls back. Commodities are weak. Along with that, the FAS, which is a bear, no, the bull, the daily financial bull, which is a leveraged ETF that moves 3 times as high as the stock indexes, would actually pull back 3 times as much. And since investment advisors can't trust their own financial institutions to make the right decisions, the right investment choices, to do what's right for their clients' best interest, that they themselves can't even recommend to their own clients to buy into the banking institutions, because they themselves know it deep down in their own brains and their own hearts that they themselves are, perhaps they're not really crooks, but they know that deep down, somewhere deep within them, that is not a good investment idea, mainly because of the negative outlook we have as analysts towards those banking institutions, but also because of the fact that these banking institutions have been exposed to so many different types of asset classes and highly leveraged situations or derivatives that would cause tremendous damage to these banking balance sheets. So overall, I do believe that people have a general mistrust for financial institutions. The people that are selling these investments to their clients also feel the same way, and therefore we're having a hard time getting a bid in the financial sector. And therefore we've seen the daily financial bull continue to be on a decline for the rest, or for the most of 2010, 2011, and going into 2012. I believe there is even more downside to be had in the FAS. So for right now, I do anticipate this short-term double top pattern to play out, including all those other factors I mentioned on the macroeconomic scale. We get a pullback from here. I anticipate the 20 to 50-day moving average to be short-term support, but inevitably, I do anticipate the markets to come back down to that $55 area for short-term support, but it would probably last for a day at most, maybe a couple minutes, a couple hours. But what I'm really aiming for is that $50 level. But that is, again, a very lofty goal that would imply that I would get a 30% return on investment shorting this asset. And again, I would be happy just with the FAS declining all the way down to 55. That would still leave me with a 20% gain on investment. So again, I am going to be shorting the daily FAS, and I do anticipate much more downside on the stock in the near future. Okay, moving on, the S&P minis are already showing some weakness, and this furthers my analysis because we are running into that doji star pattern. I mentioned this on the Dow Jones Industrial Average, which tends to mirror the E-mini S&P 500 anyway, except for the small difference in asset allocation. They tend to move in the same direction regardless. Top is in play right now. Perhaps we're pulling back from the top. The outlook right here is relatively negative. Again, anybody who trades the markets knows that a Doji Harimi top is a topping pattern. Whenever you see a topping pattern, it's a good idea to assume that there is going to be short-term downside, perhaps because of the fact you have a double top and a Doji Harimi star. That's why we're having some selling. And again, I wouldn't be surprised if people were to pull out some of the capital they've already made in the last couple weeks. Okay, so they're going to close their profits and hopefully make another re-entry. perhaps somewhere else down the line. But right now, if I were trading these markets and if I was in the middle of that quick decline or quick incline from 1,200 to 1,256, I'd be taking my profits and bagging them and running with them. That's what I would do. Okay. Now moving on, Lockheed Martin. Now Lockheed Martin is an interesting company. The main reason is because we've seen the stock trade into that $80 level, $81 level so many consecutive times without ever being able to break through it. $82, $81. It's the same story over and over and over again. Look at this rising star pattern. These rising star patterns are so hideous. Whenever you see them at the top end of a channel, you always sell the stock. Main reason is you want to lock your profits before everyone else does. And whenever you lock your profits, that causes a market pullback, a scenario. And again, the Lockheed Martin is an aerospace and defense. And the main reason why I believe aerospace and defense is exposed to the macroeconomic situation is because, again, once these austerity effects start to kick in, the first thing that would have to be cut is aerospace and defense. Once the G20 states, which a vast majority of the G20 is comprised of the United States, the European Union, once those two major blocks of the economy start cutting back their spending, you're going to see a quick, and I mean a very quick decline in however much money Lockheed Martin could possibly earn from all these military contracts that are ongoing. And not only that, I anticipate the troops to pull back, at least from the United States, the U.S. military to continue pulling out from Iraq and the Middle East. And as troops continue to come home from the Middle East, that will reduce the amount of spending that is going on in the Middle East conflict. So that too will have a negative impact on Lockheed Martin in terms of earnings. But the technicals and the fundamentals are pointing in the same direction, which is very negative. I wouldn't be buying this stock, and I'm definitely going to short it going into tomorrow's trading session. Moving on, Amazon.com has pulled back towards the end of the trading session, and again, it's just trading in a downwards trend right now. Nothing too special. Let's move on to the next chart, LinkedIn. LinkedIn is again continuing its downwards trend. I want to wait for the $60 to break and pierce before I continue another short position. I may consider re-entering it tomorrow. I'll give it some time and consideration before making a new entry. I do think that we'll eventually touch this bottom area again at around $50, $58, $56, $55 on the LNKD. So give it some time. Overall, my market outlook is fairly negative for the next week or two, and we'll give it some time to play out. Take care, folks, and I'll go ahead and see you guys in the next video.